안녕하세요. 네, 오랜만에 인사를 드립니다. 반갑습니다. 장현리입니다. 네, 정말 오랜만에 귀한 분 모시고 오늘 또 중요한 말씀을 좀 나눠보도록 하겠습니다. 정말 오랜만에 한국에 다시 찾아주신 분이죠. CME그룹의 수석 이코노미스트 에릭 놀란드 자리해 주셨습니다. 반갑습니다. Hello, Eric.
Hello.
Yes, welcome back to South Korea. It's been 4 years since since your last visit, isn't it?
I think that's right, yes, and I'm so happy to be back.
Right. There have been a lot of changes, not only just changes in the global economy, but there have been the rate hikes, the 4 giant steps for the last like 6 months after the second half of the 2022. And I'm very sure that our investors are eager to hear from you today. Why don't you give us the brief backgrounds and the market trends?
Right, so the Federal Reserve, as you mentioned, has been making these enormous strides towards increasing interest rates. And it looks like they're going to go a little bit further on the upside. And what I think is also important is that they're not the only ones. Almost every major central bank in the world is also tightening interest rate policy. So all of us is going to start taking a lot of money out of the markets, which has the potential to create volatility and a very changing economic situation.
Right. It's really great to have you back, first of all. The weather is really bad, and not only the weather, and it seems like the market this year for the investors, the stocks, bonds, and not only that, the real estate and everything have really hit hard. And the highest inflation in 4 decades forced the Federal Reserve to jack up the interest rates and in an attempt to cool down the economy. And lately, it seems like there are signs that Fed's aggressive policies are starting to work, right? What do you think?
Well, I think it's a little bit early to say. In monetary policy, we often say that it takes anywhere from 6 months to 2 years to evaluate the impact of a change in monetary policy. So this change only began about 9 months ago, and at the beginning very slowly. So it may be well into 2023 or 2024 that we know if the Fed has succeeded in containing inflation or not.
Well, of course, it will be very wise to invest in the very safe or the value stocks for the investors. But probably it's wiser to hear from you. Of course, that's why we invited Erik Norland to South Korea. It was like 2018 last time you visited us. Why don't you give us the market trends first of all? Probably some people say that the market trends have been quite similar to that of 2002 and 2000, maybe early 2000s probably, or some of like 2007 and 2009. Do you agree with that?
So I think that we're in a very different situation in 2007 to 2009. 2007 to 2009, we had a major real estate crisis in the United States and in Europe that became a banking crisis. This time around, the banks are in good shape. We don't have to worry about them so much. Real estate prices are very high, and they could become a problem if they keep falling, as they've started to fall. But I think things look a lot like 2000 to 2002. In the late 90s and early 2000s, we had 2 things that we're starting to see again today. First, we had an emerging markets crisis. And secondly, we had overvalued technology stocks and too much money chasing too few opportunities in the technology sector.
I see. 지금 에릭 놀란드와 또 우리 2000년대 초반 혹은 90년대 후반과 관련한 얘기를 좀 들어봤습니다. 그때와 지금 상황이 좀 비슷한가요? 라는 질문에 그때와 지금 상황은 좀 많이 다르다. 아무래도 좀 기술주들이 오버밸류 돼 있다. 네, 가치 평가가 좀 다르게 좀 오버밸류 돼 있다라는 의견을 좀 들어봤는데요. 어떻게 다른지 좀 더 자세히 좀 들어보도록 하죠. You just mentioned that it's slightly different from that of the technology stocks and that of the market. Can we take a look at the market as you have prepared some of the graphs?
Right, yes. So if you look at how the equity market has been evolving so far this year, it resembles a great deal the bear markets from 2000 to 2002 and 2007 to 2009. I think economically, we look more like 2000 to 2002, but the stock market's been coming down at roughly the same pace. So I think the main question is, does the stock market have further to go on the downside.
Right. Like you just mentioned, 지금 에릭 놀란드 수석 이코노미스트께서도 말씀하셨지만 올해 참 한 해가 정말 힘들었던 것 같습니다. 많은 투자자분들이 아무래도 2022년 하반기부터 미국의 또 금리인상이 본격화되면서 주식시장뿐만 아니라 모든 시장들이 자산뿐만 아니라 뭐 부동산 시장도 큰 타격을 입었고 S&P 500을 포함한 시장들이 굉장히 큰 타격을 입어서 하락의 길을 좀 걸어갔죠. 지금 말씀하신 것처럼 S&P 500, 네, bear market, right? You have just compared that of 2000 and 2002, and if you take a look at the closer look at the bear market, that of 2022, can you give us more details, please?
Yeah, so the 2022 bear market so far has mainly been an impact from certain sectors of the stock market, from technology stocks, from consumer discretionary stocks, and a few other sectors that are very highly valued. But there are some sectors that are doing well, like energy.
Oh, so you said the energy are doing good.
Yeah, energy is doing well because energy prices have been very high. So oil companies, oil services companies are doing quite nicely.
But that's a different story from that of early 2000s and 2002. But you mentioned about late 90s as well.
Yes. Yeah. So the late 1990s, we had major crises in emerging markets, especially beginning here in this region in 1997, and it spread to Russia and other countries by 1998. This time we're seeing something a bit different. This time it's the People's Republic of China that seems to be suffering somewhat of an economic crisis because of their property sector. And we're also seeing this in many smaller frontier markets. I would say places like Nigeria, Sri Lanka, Lebanon, where the stresses are accumulating. And as the Federal Reserve raises interest rates, this is going to make it, I think, very difficult for many of these emerging market countries.
You just mentioned the emerging market, and I think I need to explain that to our viewers. 지금 언급해 주신 것처럼 우리 시청자 여러분들도 많은 분들께서 이미 뭐 주식시장에 투자하신 분들도 계시겠지만 신흥국 시장, 그렇죠? 신흥국들이 굉장히 큰 타격을 입었습니다. 주식시장도 너나 할 것 없이 많은 신흥국 시장들이 큰 타격을 입었고 또 자세히 좀 더 들여다봐야 될 텐데요. What about the emerging markets, including probably you just mentioned Sri Lanka and other Nigeria? Probably we need to cover the China later on. But why don't we talk about the monetary and fiscal policies? Like I think we need to take a deeper look into the equity market and bond market as well.
Right, so let's focus on the equity and bond market, and especially in the United States. There's been a lot of things I think that have been happening that have been very, very concerning there. During the decade before COVID, we had the ideal environment. Stocks went up, bonds went up, and they had a negative correlation on a day-to-day basis, which meant that people who were long stocks and bonds together did exceptionally well. But now in this past year, we've seen stocks coming down, bonds coming down with a positive correlation. So the diversification from that traditional portfolio where you're long stocks and long bonds has come down greatly.
Right. What about you just mentioned about the co-relationship between the equity and the bond.
Yes.
And recently, it seems like because of the Fed's the rate hike, the U.S. Treasuries, the bonds, everybody's all focusing on that too. Do you have anything more to say about the Treasuries, U.S. Treasuries?
Well, so U.S. Treasuries have had a very, very bad year. They've come down tremendously in price as yields have risen. Now, however, it might be that yields are getting near their highest point, so it may be that prices have already hit bottom. And this has to do with an expectation in the market that the Federal Reserve will succeed in containing inflation. But the problem is that that expectation might turn out not to be true.
You just mentioned about the positive, the co-relationship between the equity and the bond market, right? And what about the inflation and the U.S., the CPI, and can we move on to that part too?
Yes, absolutely. So in the United States, like in many countries, we have seen a surge in inflation rates. And this has come as a major shock to the economy. Up until 2020, we had been in a period of more than a quarter of a century in which inflation was always around 2%. And then suddenly inflation rates got to as high as 9% earlier this year, and it's still running at 7.7%. Even excluding food and energy, inflation is still over 6%. And so this is behind these enormous moves by the Federal Reserve to raise interest rates, which can have a lot of impact on the economy in the years coming forward.
Okay, you just mentioned about the inflation. And the inflation that's why the Fed is trying to, cut down the inflation, and they are trying to have this giant step for the 4 times this year. And what about the December? Everybody's like, kind of guessing that they will have the rate hike, of course, about 50 basis points.
Yes, that's right. So the market believes that there is a great likelihood that they will do 50 basis points more when they meet on the 14th of December. There is a minority of people who think they might even go another 75. But I think the Fed has been quite clear in recent days that they're planning to slow down to a 50 basis point increase.
What about in February? Do you also think that the Fed will have another 50 basis point increase?
So the further you go in the future, the less certain it becomes. But for the moment, the market seems to price that the Fed will do a second 50 basis point move in February, which still brings rates up 100 basis points further than they are today. And we've already raised rates almost 400 basis points this year.
Right, that's true. But if that's the case, the inflation will continue to fall, hopefully, and it means that it will enable the Federal Reserve to slow the pace of the interest rate after that, probably, but it will boost the asset prices, wouldn't it?
Well, it's very hard to say what will happen to asset prices, but what the market expects is basically the scenario that you outlined, that the Fed hikes 50 in December, 50 in February, and then most likely pauses for a long time. And then the market then prices that sometime late next year or early in 2024, the Fed will begin cutting interest rates. If that happens, that could be very, very positive for the equity market.
You just mentioned about the rate hike and inflation. The inflation had a tiny 0.2% of surprise to the downside, right?
Yeah.
Do you think the market reaction was kind of justifiable?
I can understand why people were happy about the downside surprise on inflation, but I think the market reaction was a little bit oversized. I think that they maybe overreacted to 1 month's data. The Federal Reserve doesn't look at just 1 month's data. It looks at a bunch of different reports, and so I think the market may have overreacted.
Some people also warn about the recession because of it could crash the party. Do you agree with that?
Certainly a recession would not be good for corporate earnings. The market, I think, is looking at essentially from an equity perspective, the positive side of a recession, which would be lower inflation and lower interest rates, which is typically good for stocks. And I think, as you rightly point out, the market has forgotten about the bad aspect of recession, which is usually lower corporate profits and lower dividend payments.
Right. 지금 에릭 놀란드 수석 이코노미스트를 모시고 올해 또 12월 그리고 내년 2월까지 미 연준이 어느 정도의 인트레스트 레이트 올릴 것이냐, 기준율을 얼마나 올릴 것이냐라고 지금 또 말씀을 나눠보고 있는데요. 12월에 한 50 베이시스 포인트를 올리지 않을까라고 예측을 좀 해본다. 내년 2월에도 마찬가지로 50 베이스 포인트 정도 올리지 않을까라고 예측을 해본다라는 말씀을 좀 해주고 계십니다. Okay, we also need to talk about the housing and the rental inflation. Why do we actually need to focus on the housing and especially rental inflation?
Yeah, so rents are the largest single component of what the United States measures as inflation. It's about 30% of the consumer price index. And it falls into 2 categories. So one category is very simple. It's just rents for people who rent apartments. That's about 7% of the index. But 23% of the index is something very abstract, which is what is called owner's equivalent rent. And the idea is that, imagine that we're neighbors, and you own your home and I rent my home. So imagine my rent goes up 10%. Then the government will then say, well, then you rent your house from yourself, which of course you don't, but that's what the government statisticians will say, and therefore you pay yourself more rent. So rents are a huge component of CPI, and they're increasing very, very quickly for two reasons. First, mortgage rates have gone from 3% to 7%. So a lot of people who might ordinarily like to buy homes can no longer afford to buy them.
Of course not.
And secondly, these people are being forced into the rental market. And the vacancy rate in the rental market is extremely low. It's only 1.5%. So there's not many properties available.
Okay, I understand that. 뭐 기준금리가 올라가다 보니까 주택 가격이 올라가게 되고 그 전에는 주택을 구입을 하던 사람들이 이제는 주택을 구입하기가 힘들어지는 모기지 론을 받기가 힘들어지죠. 그러다 보니까 렌트를 하기 시작을 했다고 합니다. Okay. I understand that part, but it's a little bit tricky to understand. People try to start renting themselves. That's a little different story from the Korean's perspective. However, so we understand the housing part. So people start to rent themselves and start to, instead of buying the houses, they start to rent. So
Yes.
that's why the rental inflation started.
Yes, exactly. So basically, as mortgage rates have increased, people can no longer afford to buy the same houses that they might have been able to buy with lower mortgage rates. So instead, they have to find rental properties. And rental property prices are going up. And so that pushes up not only the prices for people who really do rent, but also the imputed rent, or what's called owner's equivalent rent, where the government makes this assumption that people rent houses from themselves, which is kind of crazy, but that's how they do it.
Okay. I guess, I mean, everybody has like different way of policies and different nations have different culture, of course, but okay. Yeah. We also have different culture and mortgage loans in Korea. Yeah. Okay. Now, why don't we talk about a little bit different stories? I think we need to move on to the next question. We talked about the housings and rental inflation in U.S. Now, let's talk about the job markets.
Right. Yeah. So the job market in the United States is very, very tight. Unemployment has fallen down to very, very low levels, which is true also in Europe, by the way. Unemployment is basically down to where it was before the pandemic. And the other problem is that now that we've gotten back even past the peak in employment, employers are still looking to hire huge numbers of people. In the United States, for example, employers want to hire 10.3 million new workers, but there are only 6 million workers available. And so this is putting upward pressure on wages. And upward pressure on wages could create upward pressure on inflation.
Okay. But, you know, as far as I know, the job markets and the Federal Reserve or the Feds, they want the full-time employment, don't they?
Yeah, so the Fed has a dual mandate of full employment and price stability. So before the pandemic, we had full employment, but inflation was only 2%. So everything was fine. The problem is now they have full employment, but even more than full employment, they have too many job openings for too few workers. And we no longer have price stability. Inflation is now 4 times higher than it was before the pandemic. And so this is what's created the problem for the Fed.
That's why they're trying to cut down the numbers of the job markets.
Exactly. So they're trying to raise interest rates to slow the economy, to slow hiring, to lower inflation.
Okay. 지금 어떻게 보면은 에릭 놀란드 수석 이코노미스트와 말씀을 나누면서 사실 미 연준이 계속해서 job market, 그 job market의 넘버 수치가 떨어지기를 바란다. 인플레이션율도 낮추기를 바라고, job market도 떨어지기를 바란다. 그 전에는 완전 고용의 상태를 원했다가 오히려 지금은 고용의 수치가 좀 더디게 가기를 바라는 미 연준의 이중성을 좀 말씀을 나눠주시고 계십니다. 네, 이렇게 하면 어떻게 투자를 해야 될까 조금 아이디어를 가져갈 수 있을 것 같은데요. 계속해서 말씀을 좀 나눠보도록 하죠. 네, you just mentioned about the job markets, but what about UK, European markets and US markets? Is that the same in Europe as well, as much as the US?
Pretty much, yeah. In Europe, there's a very, very tight job market as well. It's the same thing is true in the United Kingdom as well as the Euro area. Also, even in Japan, many other countries are seeing a very, very tight labor market where there's far more job opportunities and listings, and there are people to fill those roles.
I see. You just said that the European markets are much tighter, and UK as well, and Japan. Do you think that will continue after like 2023?
Yes, I think it probably will for a while. The Federal Reserve has increased rates a lot, so the U.S. economy will probably slow down first. The European Central Bank and the Bank of England have not been increasing interest rates as quickly as the Fed, so their economies may take longer to slow down. And the Bank of Japan's not tightened policy at all. So their economy could remain hot for a long time.
These all things are like related to the job markets, and not only the job markets, but it's related to the corporates, and because of the corporates, it's related to the debt and everything, the debt levels. I mean, when we are talking about the debt levels, I cannot miss out the countries like who are in the place where they're very in uncertainty level, especially China, like we mentioned earlier. Can we talk about the Chinese market and not only that, the emerging markets, please?
Yes, absolutely. So debt levels have been increasing worldwide over the last several decades. Europe and the United States have extremely high levels of debt. But one of the biggest changes in the last 15 years has been that China has gone from being a country with very low debt to being a country with even higher levels of debt than the US and Europe. And this is starting to weigh a great deal on China and on its economic growth. In particular, the problem for China is that they have a lot of corporate debt. And China has a bond market that is used to finance that corporate debt, and the bond prices have been crashing. They've fallen over 40%. So China's corporate bond yields have been going higher and higher and higher. And this is making it very difficult for China to finance that debt, particularly for the Chinese property sector.
네, 지금 말씀하신 것처럼 중국의 경우 또 신흥시장 중에서도 특히 중국의 경우 채권 가격이 급락을 하면서 최근 들어서 굉장히 어려움을 겪고 있다. 그렇다면 과연 지금 중국의 신흥시장에 투자할 수 있는 것인가 이런 궁금증을 가지고 계신 분들이 많이 있으실 것 같습니다. 계속해서 좀 말씀을 이어가 볼 텐데요. There are some people who invested. They're like especially individual investors. They have invested their money into like Chinese market, and they'll be probably worrying, if they should keep their money in there or they should just, escape from their market right now. What should they do next year? They probably have a lot of questions. We would like to hear or get some idea from you. Why don't we talk more about the debt levels and including the stock markets and especially the emerging markets?
Right. So when it comes to China, they have a huge impact on commodities worldwide. So if China's economy remains slow, it could be very bad for commodity producing countries in emerging markets. So that would be places like Brazil, Chile, Colombia, South Africa, Russia. All those kinds of countries would suffer if China's economy does badly. It would not, however, necessarily be bad for emerging markets that are not commodity producers. So places like India, for example, could be just fine even if China's economy slows. There's also the question of the Chinese stock market as well. And one thing that's very interesting about the Chinese stock market is that the valuation levels are very, very low. I think in part because China's stock market really has gone sideways for 15 years. From 2007 to now, the prices have not really increased at all. So it's not like the American market where the prices got very, very high.
That's true. 지금 말씀하신 걸 들어보면 또 다시 좀 종합을 해볼게요. 좀 정리를 해보겠습니다. 미국 시장과는 좀 다르게 중국 시장의 경우 2007년도부터 지금까지 가격의 변화가 그렇게 크게 없었다. 주식시장만 놓고 보더라도 S&P 500 같은 경우는 변동성이 좀 컸죠. 그러나 중국의 경우 예전 2007년도나 지금 2022년도나 뭐 가격의 변동이 거의 없다라고 볼 수 있겠습니다. 물론 뭐 쭉 올라간 경우도 있었겠지만 지금 다시 돌이켜 보면은 그때나 지금이나 뭐 크게 변화가 없는 것처럼 보일 수 있겠습니다. 어떻게 보면은 다시 제자리 걸음을 한 것으로 뭐 2007년도로 돌아간 것처럼 보일 수가 있겠는데요. What about the China's debt level? If we go back to that, they exceed the European market and the U.S. Is that true?
Sorry?
China's debt levels exceed those
Yes,
of the
that's right.
EU.
Yes, that's right. They exceed those relative to the size of the Chinese economy. Their debt levels are higher than either Europe or the United States.
So you just mentioned about the commodities and the stock market, so they're much riskier than that of the US S&P 500. So it's not a good idea to invest for the individuals.
I think it's difficult to say. The S&P 500 in the U.S. is still potentially very, very far overvalued, which may not be the case in China. And both the U.S. and the Chinese economy are facing troubles, different troubles. The U.S. because the Federal Reserve has raised interest rates by soon maybe as much as 500 basis points. China because of the over-reliance on their property sector, the continuation of COVID lockdowns, as well as the very high levels of debt. So I think both markets are potentially very risky, and I don't honestly know which market is the most risky.
Well, maybe I asked you too straightforward because a lot of Korean investors invested in overseas market. 제가 너무 단도직입적으로 좀 여쭤본 것 같습니다. 국내 투자자분들이 어떻게 보면은 지난 뭐 몇 년 동안 국내 증시보다는 조금 더 변동성이 큰 뭐 해외 증시 쪽으로 좀 눈을 돌렸던 것 같은데요. 이와 관련해서 미국 증시 혹은 또 중국 증시 신흥시장에 좀 관심을 좀 어떨까 하는 질문을 좀 드려봤습니다. 계속해서 말씀 좀 이어가 보도록 하죠. The reason why I asked you that question was that a lot of Korean investors or individual investors, they were interested in overseas market rather than Korean market because they were pretty slow and it was like rather than bull, it was bear market for the past few years, especially last year, since last year and this year. It was worse after the rate hike. Okay, not only that, just like you mentioned, the China's debt level, probably Korea is facing the difficulties as well. Is there any much more downside risk for China after the inflation rate?
There is certainly a lot of potential downside risk for the Chinese economy. They have extremely high levels of corporate debt. They have rising bond yields, which is making it more difficult to finance that corporate debt. And China has, I think, essentially allocated too much of its economy to housing construction. And this is a problem in an economy that has an aging population, a population that's now starting to shrink rather than increase. They have a lot of unused housing. So this is a potentially really big problem for that sector of the Chinese economy.
So shall we move on to the Europe as well? What about in case of Europe? How are they doing?
So Europe is also experiencing a lot of problems. Their problems are a bit different than that of China. In Europe, they have the main problem, I think, is the Russo-Ukrainian war. This has sent the price of natural gas to very, very high levels, which is impacting both households as well as manufacturing and other businesses, including farming, since fertilizers are made in part with natural gas. So Europe has experienced an enormous supply shock. Now, what I would say about Europe, though, is that Europe, much like Korea or Japan, has relatively low valuations in its stock market, which make it very different than the U.S., where the equity market, especially the technology shares, are still so expensive.
Okay, not only it's the Feds, but it seems like the Bank of or UK or like Bank of England or ECBs are also considering the rate hike. And how would that impact the market?
Right, so the ECB has been hiking rates, but the ECB has gotten off to a relatively late start. They didn't even begin raising rates until July, which was quite a long time after the Fed began raising interest rates. But the ECB is now catching up, and so they're raising interest rates now in big increments. And I think this is very, very risky for the Eurozone. The Eurozone is a very different thing than, say, the Korean bond market or the US bond market, because you have many different countries issuing debt into a common currency. And so one of the risks is that as they raise interest rates, some of the countries begin to experience severe financial stress, while other countries are still doing okay. So essentially, this could take Europe back to where it was in 2011 and 2012, where certain countries were facing defaults, while other countries were doing okay. So Europe, I think, is in a very delicate situation.
Okay. You just mentioned about the European market. We also need to talk about the European nations and also the real estate about the European markets probably. Can you explain more details, please?
Yeah, so the European real estate market has been, so again, in Europe, every country is different, but there are certain countries, certain places in Europe, particularly in Germany, where real estate prices have gone very high, or Sweden, also around Paris and London, real estate prices are extremely high. And now that interest rates are rising, it's going to put a lot of those real estate prices under downward pressure. We're already starting to see sharp declines in real estate prices in London, Paris, and Sweden. And there are other countries in Europe, especially notably Spain and the United Kingdom, where most homeowners are on adjustable rate mortgages. So as interest rates go up, their mortgage payments immediately begin to increase. And this could put a lot of downward pressure on consumer spending in those countries.
In case of Korea, or probably in Seoul, especially Gangnam area, the other areas, they start to decrease. The real estate or the housing prices start to decrease, but the Gangnam area, they stay the same. What about, I wonder, maybe, would that be pretty much the same story in London, Paris, or other countries like, for example?
Yeah, I think in every market, real estate exists in sort of different tranches. And so there's a very high end to real estate. The very high end real estate tends to be purchased by people who don't need to take out mortgage loans because they have a lot of cash, a lot of money. It's more that sort of middle tranche and lower tranches of real estate where the buyers have to take out mortgage loans that are going to be the most affected. And then, of course, you have the separate question of office real estate. After the pandemic, people don't need as much office space as they did before. And the property developers with offices or commercial properties are also facing higher mortgage rates, which is also a potential source of financial stress.
What people are more stressed about these days is that a long time ago, not that long ago, but it was like about back in 2014 or 15. I remember ECB, we had this, or UK, not UK, it was like US. We had like quantitative easing, but now we all talk about quantitative tightening, and that's why people say that it's the reason of the bear market. And the quantitative tightening maybe is causing much deeper bear market, and some people say that. Do you agree with that as well?
I think that it's a major risk. The Federal Reserve in the United States, beginning in March 2020 until early this year, created $5 trillion in liquidity. And when they did that, I think it caused the U.S. stock market to diverge from its fair value. And I think it caused U.S. stock prices to increase far beyond their sort of normal valuation levels. Now that the Federal Reserve is shrinking its balance sheet, and not just the Fed, but the ECB, the Bank of Japan, and others are shrinking those balance sheets, the risk, I think, is that equity prices could wind up falling much further.
Okay, could we cover more about the equity markets, and especially with the quantitative easing?
Yeah, so essentially the Federal Reserve began quantitative tightening a few months ago. They're now shrinking their balance sheet at $95 billion per month. And so this would be a concern under any circumstance. But what makes it an especially acute concern, or especially severe concern right now, is the fact that the stock market in the U.S. is still so expensive. So the risk is that as they reduce their balance sheet, it creates more down days and equity investors begin to rush to the exits. And we wind up seeing potentially a much more severe bear market.
So now I just said like quantitative easing, but originally now it's like quantitative tightening. But
Right.
someday, like later on, they should be going back to the quantitative easing. Don't they need to do that?
Right, and so we've already seen this happen in one country. I live in London, and in England, we saw this really astonishing thing happen in September, where the bond market there abruptly collapsed. And at this point, the central bank is supposed to be tightening policy. You know, they're raising interest rates. They were planning to do their own quantitative tightening. But as the bond market collapsed, the central bank was faced with a choice between fighting inflation and financial stability. So they chose financial stability, and they started doing quantitative easing in the midst of a tightening cycle. Now, the Federal Reserve has not experienced this yet, but there is a risk that something of that nature could happen in the future, where the Federal Reserve perhaps is faced with declining real estate prices or a declining stock market, and is faced with the same choice, where it has to either continue to fight inflation through raising interest rates and quantitative tightening, or financial stability, which it could maybe have to go back to quantitative easing, which is what happened to the Bank of England.
Okay. Oh, well, glad that you mentioned about the Bank of England, and also that you said you live in London. And this is just a personal interest and question, since you just mentioned about it. London just reminds me of the gold and everything. And since you come from CME, and you're probably the expert of the gold, can I ask you some questions about the commodities market,
Of course.
especially the gold, please?
Yes, absolutely.
Because Korean people love gold. 한국 분들이 참 금을 많이 좋아하시거든요. 금 투자에 대한 의견을 좀 들어보고 싶습니다. Can you give us some ideas how the gold prices would move?
Right, so gold prices have been in a very strange situation these last few years. Normally, people believe that gold is a hedge versus inflation. So one might have expected gold to go much higher as inflation went from 2% to 8%, but it didn't happen. So why? And I think there were two reasons. First, gold does not like higher interest rates. Gold is essentially a currency that pays zero interest. And so as interest on government-issued currencies like the US dollar go higher, that tends to be negative for gold prices. So all these Fed rate hikes have been very bad for gold. Secondly, gold also doesn't typically like a stronger US dollar. And the US dollar was very strong up until a couple months ago. But now I think we're starting to see the first good signs for gold. So as we talked about at the beginning, the Fed is now slowing and perhaps halting its interest rate increases in the coming months. And that could be very good for gold. And then secondly, we've seen the dollar reversing course and starting to go back down. So in recent days, we've seen gold prices rally from about $1,650 to around $1,800 per ounce.
I see. 지금 금에 대한 투자에 관심 있으신 분들 좀 희소식이 아닐까 싶습니다. 말씀을 들어보니까 최근 11월 말부터 12월 초까지 굉장히 금의 가파른 상승세를 좀 보여줬는데요. 앞으로도 미국의 금리 인상을 앞두고 2023년 초반에 좀 더 금리 인상을 조금 더 하게 되더라도 금 가격이 조금 더 오를 가능성이 있다라는 의견을 좀 주셨습니다. 앞으로 또 금 가격에도 계속해서 관심을 좀 가져보면 좋을 것 같고요. 그 이후에 어떻게 될지도 한번 가늠해 볼 수 있을 것 같습니다. Okay, so you just mentioned that the gold price would have a slightly much more possibility of going higher after the beginning of 2023. What about the dollars? Do you think there is still possibility that there will continue to go higher?
Well, it's always a possibility the dollar could go higher, but I think the tide is most likely turning against the dollar. So there's different forces that act on currencies. And the dollar was pulled higher because for a long time, the U.S. was growing faster than most other economies. So that was helping the dollar. Secondly, monetary policy. The Fed was hiking rates sooner and faster than most other central banks. And so now both of those things are changing. The U.S. economy, I think, is going to slow down a lot, and it's not going to be an outperformer versus the rest of the world. In fact, I would think Japan and maybe Korea and other countries could do better than the U.S. economically next year, maybe Europe as well. And then secondly, The Fed's now getting ready to start slowing and then stopping its hiking. Perhaps as soon as maybe February it will be done hiking. Whereas the ECB and other central banks like the Bank of Japan may just be at the beginning of their tightening cycles. So that could turn the tide against the US dollar.
So it means that probably when they're investing their money in the stock market, they need to wait a little longer in terms of to get away from the bear market. Is that right?
Yeah, so it depends, I think, on whether you hedge, whether you invest in the US equity market in a hedged or unhedged manner. If you invest in a currency hedged manner, then it doesn't matter so much what the currencies do. But if you're investing in an unhedged manner, where you're essentially buying US stocks in US dollars and not hedging them back into Korean won, and the US currency falls, that will mean that from your perspective in Korean won, your investment won't be doing as well. So it depends whether you do hedged or unhedged investments in the US.
Okay, that's pretty much what we have prepared for today. But before we end, is there anything that you would like to say for our investors from the macro perspective, and also any last words for our investors, please?
Well, I would just like to say 감사합니다 and 성투하세요.
Oh, thank you very much. 네, 오늘 CME 수석 이코노미스트 에릭 놀란드와 함께 또 말씀을 나눠봤습니다. 오랜만에 한국을 다시 찾아주셨는데요. 오늘 성공 투자하시라고 또 좋은 말씀도 나눠주셨습니다. Thank you very much, Eric, and thank you for visiting us, and thank you very much for your great information and knowledge for sharing with us.
Thank you so much for having me.
Thank you for your Korean words too.
Thank you.
네, 감사합니다. 네, 저희는 오늘 여기까지 하도록 하겠습니다. 저희 또 함께 방송 시청해 주셔서 고맙습니다. 감사합니다. Thank you.
Thank you.